All right, let's talk about one of the hottest topics in finance right now, real-world assets, or RWAs. We're diving into how actual physical stuff, like real estate, is being brought onto the blockchain, and it's totally transforming how we think about investing in property.
So here's what we're going to cover. First, we'll get into why this is all happening now. Then, we'll look at how it's actually built, the nuts and bolts. We'll explore the really cool new investment models it creates, map out the key players, and then I'll give you a practical playbook for getting started. We'll wrap it all up with a look at what's just around the corner. Okay, first up, why are real-world assets suddenly the talk of the town? I mean, for years, this whole idea felt like something out of a sci-fi movie, right? But something has fundamentally changed. Let's dig into what's driving this massive shift from just hype to, well, reality. And that's the key right there. This isn't just a thought experiment anymore. We're seeing major institutions jumping in, and a whole range of different assets are moving on-chain. What was once just a cool theory is now a very real, very practical way to invest. That momentum is what's really driving everything. A huge part of this shift comes down to simple economics. Those insane 20% plus yields we saw in DeFi, decentralized finance, well, they're kind of disappearing. Now you're lucky if you can find 2.5%. So all of a sudden, the stable, predictable, and frankly really attractive returns from real estate, they're starting to look incredibly good to a whole new wave of digital investors. So how does this all get built? It's way more complicated than just creating a new crypto token and slapping a picture of a building on it. There is a ton of foundational work that has to happen first, behind the scenes. At its core, tokenization is really about this. You take the legal rights to a physical property and you represent them with digital tokens. What that means is you can own a tiny fraction of a huge building and you can buy or sell that little piece way, way easier than you could ever trade a whole property.
So what does it really take to get this right? Well, it's a pretty complex challenge, and it really rests on three distinct pillars. You absolutely need the technology to make it work, you need a compliant legal structure that actually protects investors, and you need a financial product that people can understand and actually trust. All three of those have to be rock solid for this whole thing to work.
Okay, so once that foundation is in place, we start to see some genuinely innovative new models for investing, and even for living. This is where the concept starts to get really powerful.
Now, this is a key question, especially for anyone coming from the crypto world. How is the return you get from a tokenized property any different from the yield you get from, say, a typical DeFi protocol?
The difference is kind of like a sprinter versus a marathon runner. DeFi yield, that's the sprinter. It's fast, it's exciting, but man, it is volatile. It's driven by complex code and market hype. Real estate yield, on the other hand, that's the marathon. It's durable, it's predictable, and it comes from something super simple, a tenant paying their rent in the real world today.
Let's look at a fascinating real-world example of this in action. Tokenization isn't just for your standard apartment building. It's unlocking brand new potential in specialized markets like co-living spaces and student housing. I mean, think about how powerful this is. By allowing residents to actually buy tokens in the building they live in, you completely change the dynamic. They're not just renters paying a landlord anymore, they're co-owners. Suddenly, everyone's interests are perfectly aligned. This builds a much stronger community, it makes people want to stay longer, and it literally turns tenants into true stakeholders. It's a game changer.
So, we've covered the what and the why. Now let's talk about the who. An entire ecosystem of companies is popping up to make all of this possible. You can almost think of it like a tech stack. At the very bottom, you've got infrastructure providers, guys like Block Square, and they're building the plumbing. Then you have marketplaces like Landhive and Porto. They're like the storefronts, using that plumbing to sell specific properties. And then, sitting on top, you have aggregators like RWA Estate, which act like a shopping mall that brings all those different storefronts into one convenient place.
Okay, so let's make this practical. Let's turn this into some actionable advice. If you're thinking about investing for the first time, what do you absolutely need to know? Here's a simple framework to guide you. This is your essential checklist, seriously. First, is the platform regulated? That's your number one protection. Second, what does the token actually represent? This is so crucial. Does it grant you direct ownership in the property, or is it a contract that just gives you a share of the rental income? The legal difference is huge. And third, are the projected returns even realistic? A quick look at the traditional real estate market in that area will tell you if the numbers make any sense. And this is just a critical takeaway for any new investor.
Look, tokenization adds efficiency, it adds liquidity, it adds accessibility, but what it doesn't do is magically create extra profit out of thin air. The return should always be in line with the underlying real-world asset. So, with all this incredible progress, where does the industry go from here? Let's take a peek at what the actual builders in this space are focused on for the near future.
The next phase is really all about two things: trust and adoption. And you build trust by proving the model works, reliably paying out those real-world yields month after month after month. And you drive adoption by making it radically simpler for more people to get involved.
So for investors, that means simpler tools and maybe even some gamified referral systems. For the marketplaces, the big focus is on scaling up the number of quality income-generating properties. And for the aggregators, the ambition is global. They want to bring properties from dozens of countries into one single, unified platform.
And that kind of brings us to a final, bigger thought here. As these digital tokens begin to represent more and more of our physical world, our homes, our offices, our cities, it really forces us to ask a pretty fundamental question. What does it truly mean to own something anymore?